All right, what's up, everybody? Apologies for being late. Just dealing with some interesting stuff. What was that? Anyway, hey, if you can hear me and if we are streaming in 1080p, also if you click the refresh button on the stream, hopefully everything, you'll be able to rewind. And if so, just give a thumbs up in the chat and we will get started, okay? Thanks so much for joining us, and happy St. Patrick's Day. We are live from the base of 432 Park. We'll get started in just a moment. All right, I think we can go ahead and get started here. So good evening, everybody, and welcome back to Walks and Wall Street. Today is March 17th, 2024. It is a Sunday, and it's about 9:37 p.m. Eastern Time, live from New York City. Thank you so much for joining us, and apologies for being late. Just dealing with some stuff. But this is going to be the Markets a Look Ahead live stream. And it is going to be a significant week on Wall Street, not only in the United States, but pretty much globally. And I believe that central banks, monetary policy, not only in the United States, but globally, is really going to dominate a lot of the news for the week. So a busy week for global central banks commences with the Bank of Japan announcing its monetary policy decision. Now, traders across Wall Street are pricing in about a 50% chance that the central bank will raise its key short-term interest rate to zero from negative 0.1%. Think about how crazy that is. So yeah, we're going to get this big interest rate hike to 0%. Kind of funny, right? Because the BOJ has negative interest rates. Anyway, that would end the Bank of Japan's negative interest rate policy that has been in effect since early 2016. The Reserve Bank of Australia also announces its decision on Tuesday, with the Bank of England and the Swiss National Bank following suit on Thursday. So it's going to be a massive, massive week for not only central banks, I should say not only the Federal Reserve here in the United States, but central banks globally. Now, what we have to be looking forward to, which I believe is going to be the most notable, is on Wednesday. That is March 20th. So starting March 19th through the 20th, that is going to be the next FOMC meeting, which stands for Federal Open Market Committee meeting. This is when the Federal Reserve and the chairman of the Fed, Jerome Powell, sets the pace of monetary policy. For some quick review, currently, the Fed funds rate is in a target range of 5.25% to 5.5%. And looking at the CME futures website, if you just go to cmegroup.com and look at the Fed futures, there's about a 0% likelihood we're going to get any sort of interest rate cut on Wednesday. So it looks like the Fed is going to hold steady and issue another pause. What I'm most concerned about, I shouldn't say concerned. What I'm most curious about is, are we going to have a dovish speech, or are we going to have a hawkish speech by the Fed chairman? If we'd like to review all of the economic data points that have come out leading up to the FOMC meeting, we got a hotter than expected inflation print. So CPI, the headline number, came in at about 3.2%. Many analysts on Wall Street were predicting 3.1%. So not only was that a month-over-month change to the upside, but also on a year-over-year basis as well. Inflation continues to hold above that 3% mark. As we know, the Fed's benchmark for inflation is 2%. We also have record low unemployment in the United States. In addition to that, we've been having some good non-farm payroll numbers, good jobs numbers come out. I believe during the Fed's speech, or I should say Fed Chairman Jerome Powell's speech, he's going to have to come off a little bit hawkish to kind of tame and reel in the markets a little bit. Because you have all major equity indices trading at all-time record highs. You have inflation running above print, right about 1% above where it should be, about 2%. And everything's pretty much firing on all cylinders. So if Wall Street is correct in that there'll be an interest rate cut in June, you're going to need to see more progress on inflation. And I think the only way we're going to get that is if we have some very stern verbiage coming out of the mouth of Fed Chairman Jerome Powell. With that being said, everybody, we'll take a look at futures. We'll start off with the S&P 500 E-mini futures contract that trades under the ticker symbol ES. We're currently about flat, up about 5 points on the S&P 500. Futures are trading at 5,187. We'll go over to the NASDAQ 100 futures contract, ticker symbol NQ. We're up about 38 points. The NASDAQ 100 is trading at 18,097. And last but not least, the Dow 30. The Dow Jones Industrial Average futures opened down about 19 points, 39,134. The ticker symbol for that is YM. Shifting gears, going over to commodities. We have crude oil futures opening down about 28 cents, but we're trading well above the 50-day and the 200-day moving average. Crude oil is now back above $80 per barrel. For all of those gold bugs here, let's check out how gold is trading. We're above $2,100 an ounce, $2,152 an ounce of gold. And then we'll check out the digital gold, which would be Bitcoin, currently trading at 67,349. All right, great. As a quick reminder, everybody, last week we did send out our free investing newsletter. So go ahead and check your email. If you have not been receiving our Behind the Street newsletter, you can go ahead and scan the QR code on your screen, and it will take you to the link to our Substack. We publish all of our equity research every other Thursday, right as the market is closing. And this week we talked a lot about fiscal policy. Oftentimes we'll keep it to equities and monetary policy, but I think we're seeing some interesting things on the horizon for fiscal policy. We did a deep dive into gold and Bitcoin. We also did a deep dive into the most recent CPI inflation print. This is another big piece of the newsletter, talking about energy. We spoke about crude oil and the XLE, which is the Spiders ETF that tracks the energy sector. We're watching Chevron and we're watching ExxonMobil starting to make a move yet again. And then we ended the newsletter talking about an outlook for monetary policy. So once again, if you want to sign up for our newsletter, completely free, go ahead and scan the QR code on your screen, punch in your email, and you will have access to all of our research on Substack. With that being said, let me go ahead and close up the laptop. I'll say hello to everybody in the chat, and we will get started on this beautiful St. Patrick's Day. Thanks for joining. Whoops. Let's see what we could do here, everybody. Of course, all of our wires are tangled up. It's all right. No big deal. Hey, I see Lance is here, James V. What's going on? Gary Carpenter, Western Mass Dave. I see Marius here. R2D2 is here as well. What's up, everybody? We're reporting live outside of 432 Park. Magnificent building here, developed by Harry Mackalow. Paul, what's going on? Thanks for joining us. Richard Scott. Yeah, everybody, this week is going to be dominated by central banks, right? A lot of people, say that the most powerful person in the world is the President of the United States. Whoops, hold on, let me put my phone on Do Not Disturb. Tug Carter, what's up? Peter says most inflation revisions have been showing hotter inflation, so they will hold rates as is, and I doubt there will be a rate drop. Yeah, I think Wall Street's getting a little bit ahead of itself, with this projected rate cut in June or over the summer. Not to sound like a broken record, however, I truly believe that if we get a rate cut over the summer and the markets are still trading at new highs, housing market is still tight, and the unemployment rate is still at record lows, I think you're going to set off what I like to call wave 2 of inflation. You're going to set off a tidal wave of inflation because you've cut rates too soon when we don't need to cut them, when we don't need to cut them at all. Now, the other concern that I have is the market is pricing in the rate cut, right, or a high probability of a rate cut in June, in the summer. Now, why are they doing that? Like, we need to ask ourselves why. Is it because they think inflation's going to come down that much? Or are they predicting some sort of a black swan event that would force the Fed to come in here and start easing, right? Now, if you think about a forced pivot, could this be that there's trouble looming in the regional banking sector, which we've talked about? Could there be some sort of global systemic recession that's going to happen that's going to prompt the Fed to cut? I don't think so. I was talking with a good friend the other night, and he has an interesting theory that I never really thought about, that if you look at pretty much all the economies in Europe having a really, really tough time right now, if you look at China having a really, really tough time right now. I mean, all the numbers that come out of China, number one, they're fake. That's number one. But number two, if you look at what's happening in the real estate sector, and specifically residential and commercial in China, it's a bloodbath. It's a disaster. Probably worse than 2008. So China's having a really, really tough time right now, which could spur a lot of foreign investment into the United States in the U.S. Treasuries. Now, hear me out on this. And again, this isn't my theory. This was a good friend of mine's theory, who just happens to be a very successful money manager on Wall Street. Essentially what he said is, with Europe weakening, right, with economies across Europe not doing well, with China not doing well, you could have a tidal wave of investment coming into the United States, specifically, foreign investors purchasing treasuries, right, because of the elevated levels of interest rates to get a good return. And that tidal wave of cash into the United States could put pressure on yields in and of itself, so the Fed doesn't have to cut. So this could honestly play into the United States' hands very well here, and this bull market in equities could be in the very, very early stages, which I've talked about. Because if yields come down without the Fed having to cut, generally speaking, that's very good for equities or stocks, right? One of the ways that a lot of managers and just Wall Street in general evaluates companies is based on a discounted cash flow model, right? Assuming many of you have built a DCF, the lower the discount rate, right, it makes the future cash flows a little bit more valuable. The higher the interest rates, it's going to make the present value of a company's future cash flows worth less, right? That's why going all the way back to 2021, when the Fed just started to tighten, you had a lot of these high beta growth stocks getting crushed, getting creamed, because Wall Street has to reevaluate those stocks for a higher interest rate environment. It's going to be interesting to see how this plays out. We're on the corner of East 53rd Street and Park Avenue, and you're looking at my favorite office building in the entire city. This is the Seagram building. Beautiful building, particularly in the daytime. Looks beautiful. Patrice 2020 is here. Thank you so much for joining. AJ is here. Welcome. Mark, what's going on? Thanks for joining. Mary says, I wonder how hawkish Powell will be. Maybe there was some typos there. I don't know. Yuri, what's up? Good to see you. Unij23, Western Mass Dave, NMB 45. I don't know. It'll be interesting to see how this all plays out, for sure. G. Raymond says, what about Trump seeking vengeance on everyone who dared defy him? Are U.S. markets at risk with a volatile Trump presidency? No. John Casey, what's up? Peter says, I think U.S. companies will be bringing money back to the U.S. out of China. For sure. I mean, all of that reshoring is already happening. I've said repeatedly, and I think we all kind of concur on this and agree, that not only is the United States very well positioned here, but so is Mexico. I mean, look at what China is doing right now in Mexico. China is building a lot of automotive factories in Mexico right now. It's going to create so much job growth. Manufacturing is going to rock in North America, and it's also going to rock in Japan, Korea, India specifically. We've almost talked about that ad nauseum, how I believe that India is set to benefit from this kind of reshoring, right? Junior says, hey Tom, loved the cherry blossoms earlier today. Yeah, it was awesome. You know, this weekend was picture perfect in New York. If anybody got a chance to, walk around. Hold on one second. If anyone got a chance to walk around in Central Park, it was beautiful, gorgeous. Cherry blossoms are pretty much in full bloom now. But that may be short-lived because next week is going to be very, very cold. G. Raymond says, just to know, any explanation why investors might be wary of a Trump president? No explanation. And I'm not being curt at all. There's just no. Just the answer is no. No explanation at all. Talent 103 says, I was on that block earlier today. You know, walking up and down Park Avenue on the weekend is very peaceful, particularly between 59th Street and 42nd Street. Because these are all offices, right? There's almost nobody that walks up and down Park Avenue on the weekend. This place is very desolate. Particularly in the summer, you know, after 2 p.m. on a Thursday, I mean, this place is very, very, radio silence. I mean, in the summer, you know, Fridays, I mean, everybody kind of heads out to the Hamptons, heads out east, goes up to Greenwich, Connecticut. You know, this is, I've always said, Park Avenue between Grand Central Station and 59th Street, it's pretty much, this is Wall Street, right? This is really the financial district. Not so much the physical street of Wall Street anymore. It's more right here. I mean, this is where everything goes down. I mean, look what Jamie Dimon's building, like right over here, 270 Park Avenue. We're passing Raymond James right now. You have UBS over to the left. So this is where a lot of the action takes place. You have Citadel. Now, that's their temporary headquarters. Ken Griffin is going to be building their super tall on Park Avenue to rival that of 270 Park. So the New York City skyline is going to continue to evolve and look amazing, which is great, which is really, really good stuff. Quick update, I may have to send out a bonus newsletter tomorrow. I may do that individually from a different email address just so it doesn't come off as spam. But I mean, I think we're reaching a very, very important inflection point here in the market, and this is going to create probably one of the best buying, I would say one of the best low-risk buying opportunities when this market corrects. This is the Waldorf Astoria. This is a huge total gut renovation. And there's been a lot of problems with this project too, just because the building is so old. So redoing a lot of the plumbing, redoing a lot of the pipe work has been a real challenge. Let's actually quickly do a detour here. But, you know, in the first leg of a bull market, as we've said, everything is up and out. But we don't yet have the Russell 2000 hitting a new all-time record high. The mid-cap index, though, mid-caps are now well into new all-time record highs. So the strength should come, doesn't mean it has to happen, should come from some of the small caps as the street kind of rotates out of these big mega cap names. Now, when you have that rotation out of these big TMLs, probably over the next 2 to 3 months, you're going to see a lot of volatility in base building, right? In the names that have the best earnings, the best sales, the best return on equity, you know, continuous beat and raise quarters, and that will allow us opportunities to re-enter these names and also build positions on our top names in our portfolios, but more importantly, get into the names that we've missed, right? So I think everybody should be very diligent here in going through the top performing stocks of this cycle, right, over the last 4 months. What are the stocks that went up the most? And during this correction, which we're ultimately going to be going into, right, stocks don't go up forever, pay very, very close attention to the companies, or I should say the stocks that are going down less. So when everything is being sold off, you know, very, very violently, I always like to call it the basketball underwater theory, right? If you hold a basketball underwater, like if you're in a swimming pool, and once you let go, that basketball shoots right back to the surface. You're going to see a lot of that action in these leading stocks, and that is going to be a very, very clear signal about which companies have the institutional sponsorship. So I may be writing a separate piece about that pretty soon. If anything, it's probably going to come out Monday, so just be on the lookout for that. This is East 50th Street and Madison Avenue. This is the beautiful St. Patrick's Cathedral right here for St. Patrick's Day. So happy St. Patrick's Day to all those who celebrate. And this is the New York Palace. This is a gorgeous 5-star hotel. I'm sure all of you are very familiar with this building, particularly during the holidays. This has one of the best Christmas/holiday displays of not only any hotel in the city, but really any place throughout New York City, right through here. That's another tip. If you're coming to New York during the holidays and you want to see some really, really cool stuff, come to the New York Palace. Right in this courtyard. Looks absolutely beautiful. Obviously everything's taken down now, but I mean, they really make this courtyard stunning during the holidays. Really nice hotel too. Hey, Will M says cheers and happy St. Patrick's Day. Thank you so much. Peter says China EV car maker BYD plans to manufacture in Mexico with the expectation of selling into the US. I did see that, and during one of, and I don't really watch any of these political things, but I sometimes see clips on Twitter. I believe at one of Trump's rallies, he mentioned that exact thing, right? Saying, hey, if China thinks that they're just going to come and build all of these manufacturing plants in Mexico, and they're going to be able to sell their cars over the border of the United States without any tax or ramification, well, they have another thing coming. We'll see how that turns out. Yeah, luxury Lacey's. This definitely looks different during the holidays. This is the Eden Fine Art Gallery. I love looking at the one right in South Beach, Miami. JH has thought St. Patrick's was on 5th. It is on 5th Avenue, but Madison Avenue is right to the east side of 5th, and this is the back of the church right here on the corner of Madison Avenue and 50th Street. But we could loop around to the front and check out the front of St. Patrick's. Storm Riders is 100% tariff on BYD is what I heard. I think I heard the same thing. Which obviously is not going to materialize. I mean, I think everybody knows that. I like to call that hyperbolic talk. There'll probably be some sort of tax, but this is a good shot from this angle, everybody, of the brand new 270 Park Avenue. This takes up an entire city block here. I'd highly recommend watching the Architectural Digest's video on the engineering at 270 Park. It's pretty incredible because what a lot of people don't realize is they had to do a ton of work to be able to get this building up, because the subway and the trains, the Metro North and the Long Island Railroad, go right under the building. So if you see these interesting trusses here, I'm not an engineer, so just go watch the video, but they had to make this very particular design to shift all of the weight of the buildings to 4 individualized pegs that sit right next to the tunnel on the Metro North. It's like a crazy engineering feat when you actually get close up to the building and look at it. It's pretty nuts. Hey, Tariq Khan, thank you so much for your very, very kind $20 donation. Says, thanks, Tom, for all you do. Happy St. Patrick's Day. Thank you so much. I appreciate you. And I wish you a very happy St. Patrick's Day as well. Even though I really don't, I guess I should say I do kind of celebrate it, for sure, obviously. I'm Catholic and I'm Irish, right? 50-50 Irish-Italian. But I didn't wear any green today. No green for me today. But Tariq, thank you so much. I appreciate it. Hey, someone says, hello, Mr. Tom. Wanted to get your thoughts in the banking community about the acquisition of Discover by Capital One. Do you think the potential merge would be a change for the better? I mean, I think it'll definitely put pressure on some of the bigger players, pretty much in terms of the consumer credit competition. Now, mainly when I talk about consumer credit, I mean just credit cards, right? And Discover is like a very, very entry-level credit card issuer, right? So, look, is consolidation good? Do I think it'll be like a huge change for the industry? Not really. I think it'll just put pressure on some of the other more established credit card issuers like American Express to be a little bit more competitive. It'll probably drive some costs down for sure. But I'd assume the question is sparked because Elizabeth Warren came out on X and posted this, diatribe about how it's going to be horrible for competition in America. I really don't see that, honestly. Hey, Dan Sang, what's up? Good to see you. Happy St. Patrick's Day to you. Will M, what's up? I don't know, what do you think about it? On the corner of East 46th Street and Madison, you have the Roosevelt Hotel, which is one of the largest migrant centers in New York City. So if you ever watched any of those, clips on the news, this is where a lot of the migrants are stationed, right in here on the corner of 46th and Madison. And you have one Vanderbilt lit up in the St. Patrick's Day color scheme. Looks awesome. Chris, what's going on? Thank you for joining us. Now, for those of you who are just joining us, pretty much this week ahead on Wall Street, not only in the United States, but I should say globally, is really going to be dominated by central banks. We're going to hear from the Bank of Japan, the BOJ, and it's quite comical, right? Because there's a very, very high probability that the Bank of Japan hikes interest rates to, wait for it, 0%. So the big rate hike that we may get at the BOJ is going to bring interest rates from negative territory. They've been negative interest rates in Japan since 2016. This could potentially be the end of that. It's going to be a big rate hike to 0. We'll see. We're going to hear from Australia, the Australian Central Bank, and then most importantly, not to be biased, but obviously the Federal Reserve is the most important and most powerful central bank in the entire world. We're going to hear from our good pal, our good friend, Fed Chair Jerome Powell, on March 20th. So the 19th through the 20th is the next FOMC meeting, the Federal Open Market Committee meeting, where they're going to set the pace of monetary policy. As a quick review, as we're looking at the front of the Roosevelt Hotel, the largest migrant center in New York, the Fed funds rate is currently at 5.25% to 5.5%, and it appears that's where it's going to stay. It's probably going to stay right there. A very useful tool, which I think everybody should save to their desktop. Just Google the CME Group Fed Watch Tool. So once again, you could Google the CME Group Fed Watch Tool, or you could type !CME in the chat. I believe I programmed it into the Nightbot, but again, !CME in the chat. That's going to bring you to the Fed Watch tool that will give you the probabilities and likelihoods of either a rate cut, or easing at each one of the FOMC meetings. And Wall Street is pricing in a rate cut in June. All right, one more look at 270 Park. I'm always fascinated looking at those big booms coming off, like the crane. It's insane. Could you imagine being an operating engineer? Being all the way up in that cab of the crane? It's insane. I give operating engineers and iron workers, incredible amounts of credit. Not to sort of veer off track here, but we'll do it anyway, might as well. At my old office, there used to be an open, like, dining room, like kitchen, for everybody. This was on 45th floor of the Marsh McLennan building. And they were building a building right next door to us, a few blocks down. And it would be the middle of winter, it'd be snowing out, it'd be freezing, and you'd see these iron workers hanging off the side of these buildings, you know, putting together these massive steel I-beams in 20-degree weather, in 30-degree weather, when it's 30-mile-an-hour winds, 50-mile-an-hour winds up there. Those guys are hanging off the side of these buildings, you know, connecting these big steel I-beams. It's just an insane thing to see. So extreme credit for that. I know I couldn't do that. I couldn't do that. And those are the people who built New York City. I don't know, kind of insane. I think that's the biggest, it kind of reminds you of the divide between like blue collar and white collar. It always, you know, just give me a reminder that, you know what, even if you're having a bad day at work, you know, you're sitting in a heated office with a cafeteria filled with unlimited food, you really don't need to complain. I mean, you have these guys hanging off the side of a building in 20-degree weather. I don't think I have any room to complain. Anyway, little off topic, but you know, there you go. All right, this is the Yale Club. Beautiful building. Now, yes, it is covered in scaffolding. Stefan D says, Tom, can you tour Billionaires Row? We can, and we have. If you go back in our channel, I've done a full walking tour of New York City's Billionaires Row, where it's a 40-minute walking tour where we went to each individual building. We talked about how tall it is, how many units each building has, who the developer is, the price per square foot in each building. So we did an in-depth tour of Billionaires Row already. I'll do one again in the spring and in the summer. But in addition to that, if you want to see what an apartment looks like at 157 West 57th Street, which is the first building ever constructed on New York City's Billionaires Row, just type !57 in the chat. That's right, !57 in the chat, and the Nightbot will drop the link to the apartment tour of the last available sponsor unit at 157. It's a 1-bedroom, 1.5-bathroom apartment, and it has just under 400 square feet of outdoor terrace space overlooking Billionaires Row. It's one of 2 units in the entire building that have outdoor space dedicated to you. And you also have access to the Park Hyatt Hotel. So the 5-star hotel, you have access to the concierge, the amenities, the private gym, the private spa, the aquarium. Yes, you have an aquarium in your building. What else you got? You have a billiards room, you have a wine cellar. I mean, it's just insane. You have a saltwater swimming pool. So check it out. It's an awesome building. Now, speaking of awesome buildings, this is the main entrance to 1 Vanderbilt. Now, I'll give you guys a tip. It is Sunday night. Sunday nights are filled with tips here. If you're coming to New York City and you're looking for a very unique and fun thing to do, might I suggest coming to 1 Vanderbilt, but walking around this side and going to the one and only American Express Lounge. I'll show you guys the entrance where you go in. I can't take you up there, but it's called the American Express Centurion Lounge. And the place is unbelievable, okay? All you have to do to get up there is call the number on the back of your American Express card and tell the concierge lady or the guy, right, that you want to make a reservation to go up to the top of the Centurion Lounge. Now, when you call them, they're going to ask you, okay, did you want to go to the restaurant? Did you want to go to the bar? Or did you want to go to the lounge? There's 3 distinct things. The restaurant has a 3-course meal or a 5-course meal. I've been to the 3-course meal, but it's expensive. I think it's like $150 a head. It may be a little bit more. But I think it's worth it because you have killer views. It's completely private. But if you just want to go to the top and get a drink at the bar, you could spend, $15 and get a drink at the bar and sit up there all day and look at the views. So you're going to come in right here, okay? On the corner of East 42nd Street and Madison Avenue, you go right here. So it's not the entrance closest to it's not the entrance closest to Grand Central Station. It's on the other side of the street. And you go right down here and you make a left. And this is where you check in. If you go on the other side, here, I'll show you. Like Carlisle is in here, TD Securities. So, I mean, this is a big building here. But you check in just to the left for the American Express Centurion Lounge. Really, really fun place. And the views are insane. You could see all of Bryant Park. You could see all the way down to the Freedom Tower. And it feels like you could touch the spire of the Chrysler Building. It's a cool experience. So check it out. Next time you're in New York, check it out. Let me know what you think. So right where you're positioned, when you're up there, it feels like you could touch the spire of the Chrysler Building. The thing is crazy. Hey, Dan Sang, this is Tom. You're right. The Forex market is going to be so volatile this week. 5 central banks. Things are going to get quite crazy. I think the U.S. equity market will probably be pretty muted up until Wednesday, right? Just kind of waiting for what the Fed says, but there's going to be no surprises. I mean, everybody really knows what's going to happen. But I think you're right. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every single day starting at 8:30 p.m. where we walk around the city and talk about the financial markets and a bunch of other fun stuff. Hey, Pineapple Water says, hey Tom, I believe they require an Amex Platinum. I'm not 100% sure. I think you may be right. Or if you just have like a business account, like an Amex business. But I think you're right. We'll just go with what you say, because I do think you're right. All right, let me catch up on some of the comments here. Elliott Wave Review says, Tom, are you planning to watch the total solar eclipse in a couple of weeks? It's a once-in-a-lifetime event. Yeah. Elliott Wave Review, I have a question because I was on Twitter, or on X, and I was, I don't know if this is fake news or not. I mean, everything nowadays is just all fake. But apparently, the state of Texas issued an emergency and told people to stock up on like water, canned food because of the eclipse. And I'm like, dude, this thing's it's gonna be like 5 minutes, right? So I don't understand why everybody's freaking out about this thing. Did anybody else see that? Now with the eclipse, everybody's gonna be cast into darkness for 5 minutes. It's not gonna be a big deal, right? So I don't know why they would make those crazy precautions, I guess. Yeah, Western Mass Dave said why. I don't know. I saw it on Twitter. Yeah, Stephanie says everyone will go primal. G. Raymond says no, not everything is fake. No, it's several hours in length. Really? So it's going to be, how long does it go on for? I don't know anything. This isn't my wheelhouse. So how long is this eclipse going to go on for, right? I have no idea. I thought it happens for 3 minutes and then it goes on. I don't know. Oh, got it. Todd says they are warning everybody in Texas because of the expected influx of people from everywhere else. Copy that. I think it'll be cool. I think it'll be fun. Jim says it's not several hours. All right. See, there is a lot of fake stuff. I'm just going to Google it when I get off the stream. Yeah, the totality of darkness is 5 minutes. Yeah, that's easy. I mean, everybody, you're in total darkness anyway, most of the time, and you're in the office building with the fluorescent lighting. Just come out for a couple of minutes, see it. I think that's going to be cool. Maybe I'll even try to film it. I don't know. All right, we're crossing over to Lexington, and this is the Chrysler Building, quite literally to the left. There's a beautiful Art Deco building here. Yeah, Jason, right? Wildlife is going to be freaking out for sure. Wasn't that a big meme on the internet? Trump looking at the eclipse. That's really the only time I remember it, because the media had a field day with it. They're like, Trump is looking at the eclipse. All right, guys, enough about the eclipse. Look at that. That's an awesome shot of New York City's Chrysler Building. This is quite the ominous looking shot. It's the Capitol Grill. Capitol Grill is always a fun time. Let's go down to 41st Street and then we'll head back towards the middle of Manhattan. All right, we're gonna make a right on 41st. Mr. King of Florida, thanks so much for joining us. I appreciate it. Oh, Peter, that'd be awesome. Yeah, it's time. I'll send you an email of some of the photos I took last time. Please, I'd love to look at them. Oh, just a quick update about the email. So my thomas.malloy@element.com. You guys can feel free to email me at that email address, like anything business related, just nothing controversial. You can use my walkswallstreet@gmail.com for any like controversial stuff. Because some of you guys have been sending me outlandish things to my work email, and my boss sees all that, and that's not like really a good look. I mean, some of the emails I get, she's like, who the hell like are you communicating with? I'm like, I apologize. So if you're going to send me any outlandish emails, which some of you do, just use just don't send them to me at all. That would be the best. But if you're so inclined, just send it to walkswallstreet@gmail.com, not the element.com. Oh, this is a cool shot looking up here. This is a nice bar. Okay, we are now coming up on Library Way. You can have a really cool shot of the Stephen Schwarzman building. If you're interested in private equity, I have a really good book recommendation. We've recommended it before. It's called What It Takes by Stephen Schwarzman. So if you're interested in private equity, particularly the story of Blackstone, it's a really good book. It's pretty much about Stephen Schwarzman's entire life, how he created the firm, and obviously he's a multi-billionaire now, and he made a massive donation to the New York Public Library. The flagship store, the branch, is right here on 42nd Street that connects to Bryant Park, called the Stephen Schwarzman Building. Hey, Cosmo, good to see you. Thanks so much for joining us. Appreciate it. It's another cool shot of One Vanderbilt. Jason says Dave Ramsey hates single stocks. Yeah, Dave Ramsey is very, very risk averse. Let's just say that. Here's another shot of Grand Central Terminal. I think for the vast majority of Americans, right, or people that don't have any financial acumen, like at all, then yeah, they should probably listen 100% to Dave Ramsey. But the whole concept of not using debt, it's a little ridiculous. I mean, Dave Ramsey's like, yeah, just save up $500,000 and slam it down on a house. I mean, that is not a very efficient way to distribute capital. But I understand the premise, right? Because most people are not good financial stewards with their money. They over leverage, but there is good debt. Hey, Sabrina Fair, what's up? Good to see you. Stan says there's nasty stuff in the media about corporations buying up. Yeah, I mean, I think there's a little bit of misconception there. Over the last few years, there's been so much criticism of, big institutional players in the market accumulating and acquiring single-family homes to be used as investments, right? Now, there's two sides of the argument. One argument, some people say, hey, we should ban institutional investors. This is the beautiful shot of the Stephen Schwarzman building. But there's a lot of people that think the government should ban institutional investors from acquiring single-family homes to be used as rentals. Now, does anybody agree with that? And there's no right or wrong answer. This is just your opinion. Everybody's entitled to their opinion. Do we think that institutions, right, large firms, should be able to compete, or I should say, most times dominate regular families that are just looking to buy a single family home so they could live in it, raise a family and the like? But if you look at the data and you really drill down, the vast majority of landlords in the United States is small to medium sized, mom and pop landlords, right? That have, let's say, under 12 units. So the narrative that it's, Wall Street is coming in here and, out competing everybody, there's a little bit of truth to that, but the vast majority of landlords are, small business mom and pop that they use these rentals to fund their retirement. But this is another beautiful New York Public Library. At the top, you have this beautiful outdoor space where you can kind of sit and overlook Bryant Park. Jason says, I agree with large companies buying up entry-level houses. Gordon says, multifamily dwellings delinquencies up with auto delinquencies. Yeah, it's interesting because, over the last, I would even say 5 years, everybody has been going so hard and obsessive over multifamily. Oh, you got to own as many units as possible. You got to own, 350 unit apartment complexes and buildings. I think there's been a little bit of speculative excess in that market, and I actually think the opposite is going to happen. I think you're going to see huge waves of demand for basic single family homes, actually. And we've been underbuilding single family homes in the United States for the last decade. Since the 2008 financial crisis, right, developers have been taking on less risk. So I actually think you're going to have the demand shift is going to be to single family. I think a lot of people are going to want to live in single family homes. I think it's going to be a good business to operate single family rentals. just due to, changes in how people want to live. But that's just me. Someone says, what was the name of the book? The Stephen Schwartzman book is called What It Takes. What It Takes by Stephen Schwartzman. This is the Bryant Park Grill. Beautiful. Jason's is down here in Texas. Apartments, 1-bedroom apartments are squeezing. A family of 5 into a 1-bedroom apartment. I don't know what that means. You're saying in Texas, more people, like a family of 5 is squeezing into a 1-bedroom? Is that what you're saying? Hey, RK says big companies should be limited, not completely stripped of being able to buy large quantities of properties. Yeah, it'll be interesting to see how this plays out. The difficulty is in the management, right? If you're a large, and this is why I think for a small business owner, you can really have a competitive edge and a competitive advantage in single family, duplex, triplex. Yeah, obviously you have the vacancy risk, right? Because if you rent out a single family home and then when they move out, now you're 100% vacant, right? But I think for someone just starting out in the real estate business that wants to try to acquire a property, you don't have to start off with these crazy big deals or even, a big deal by a 10-unit complex. Because number one, when you're just getting started, you don't know what you're doing. What if the whole HVAC system blows in that 10-unit deal? You just want to start small with something, right? And I think a single-family home, duplex, triplex is manageable. You could learn the process. You could learn how to deal with tenants, right? That's the entire part of the battle, right? Is learning how to deal with tenants, learning how to successfully vet tenants. And if you have 1 or 2 doors, maybe even 3 doors, right? What you can do is live in one side of the house, rent out the other side, and now the tenant is paying down your mortgage and you're essentially living for free, right? Or if you're talking about a single family home, let's say there's 4 bedrooms, 2 bathrooms. You live in one of the bedrooms, you rent out the other 3 to college students, and it covers your mortgage, right? Is it a big inconvenience? Of course. But if you can manage the down payment for something instead of just renting, now you essentially, what it's called, house hacked it, and you could build equity from the other roommates paying down your mortgage. And then maybe in 4 to 5 years, once you've had some equity build, maybe you could roll that into the next deal, right? So I think for a small, business owner trying to accumulate like a portfolio of, 6 to 10, rentals, I think that's the easiest barrier to entry. But again, you're going to inconvenience yourself the most. But if you're young, if you're 23 years old, you don't really care about inconveniencing yourself. You're only going to have to do it for, 5 years. Hey, Sean D, what's going on? Serene says, I started out with the small rentals. Now they are mortgage free. See, there you go, There you go. Yeah, most rentals across the United States in terms of single-family homes are used to help fund the retirement of these mom-and-pop landlords, right? That's why I'm very against the lackadaisical rules in some of the blue states like New York and California, because you're really just sticking it to the hardworking person who's scraped up their entire life savings to try to, make a down payment on the house. They tried to house hack it, and now you have, some deadbeat living in the home and you can't get him out, right? That's why it's always, always important. You have to really, really vet your tenants, because squatters are a big, big pain. That could cost you 20 grand if you have to do the cash for keys. So, just try to find your niche, I guess. Maybe you want to buy, single family, 3 miles away from a big college campus. And the value proposition there would be, well, the college kid could just live in one of the rooms instead of having to pay a ridiculous amount for the dorms. Things like that. Hey, Mark says my family bought a 4-family house for $25,000 back in the day. Wow. That's awesome. I can't even imagine that. 4-family house for $25,000. It's really insane. Stephanie says, I say young kids need to pool their resources and go in on a house, build equity. Yeah, for sure. There's the study that was done. This is looking at Times Square, by the way. That's the ball that they drop on New Year's Eve. But there was a study that was done that says the vast majority of first-generation millionaires in the United States got to their first 1 million due to the equity in their home, right? So the problem that's happening now is we have an unaffordability crisis. Many people, right, many would-be first-time home buyers are really priced out of the market, which is unfortunate, which is really unfortunate. So if we have a nation of renters, the problem becomes, well, how are they ever going to build some sort of a substantial nest egg? Which is a problem. But again, if you dig further into the data, the millennials are set up to be the biggest, well, I should say the wealthiest generation, because they're set to inherit the most amount of wealth. The problem there, and the data kind of is a little bit skewed, is there's going to be a very, very select few people inheriting the most of the wealth, right? And I think that's going to further exacerbate the wealth divide in the country. All right, we are now in Times Square. Wow, Western Mass Dave. A 14-room Victorian. Holy crap. That's insane, man. Jenny Trickett says the average American families aren't looking for investments. They are looking for good neighbors, good schools to raise their children. I mean, that seems like an investment to me. You should think about every aspect of your life as an investment. If you're buying a single family home, or you're buying a duplex or a triplex, you should treat that as an investment. You don't want to overpay for that house. right? All the money in real estate is made at the buy, right? So by definition, you know, buying in a good school district, in a safe neighborhood to raise your kids, that's an investment in your kids. Hey Darren, what's going on? Good to see you. Jason H from Florida, good to see you. Welcome, welcome. Sean D. All right, let's head down towards 34th Street. If you guys are enjoying the live stream so far, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams every day starting at 8:30. And just as a quick reminder, we did send out our free investing newsletter on Thursday. So if you like all the conversations we talk about, such as investing in equities, the real estate market, we compile all of our thoughts throughout the week into a clear, concise newsletter called Behind the Street, and it's sent out every other Thursday. If you want to receive that, just go ahead and scan the QR code on your screen or type !news, NEWS, in the chat, and the Nightbot will drop the link to our Substack. And we publish on our Substack every other Thursday. Jenny Trickett says most young people can't afford to get into single homes. They are having to rent. Yeah, I agree. And that's the thing. Like, what I'll say is this. If you are in a family, okay, and you grew up in a family and you didn't have much money growing up, but if you have siblings, the best piece of advice, right, is have a very good relationship with your siblings. Because if you can create a total family empire if you pool your resources. The problem with America is Americans are almost too independent to a fault, right? I mean, how many of you, are in a situation where, maybe you grew up with, 4 siblings, and all your siblings live in like a 1-hour radius of one another, and one of them's paying $2,000 in rent, another one's paying $1,500, the next one's paying $3,000, and the other one's paying $3,000 in rent, and you guys all live within an hour of one another. So you're almost paying $10,000 a month in capital outlay to rent and own nothing. But if you can, work together as a team, right, instead of the $10,000 or the $8,000 a month that's going towards just renting and being on your own, well, maybe you could pool those resources, right, or create a corporation, right, create a C Corp, run it as a business. Everybody gets a fractional ownership in the company, and you go purchase, let's say, a 4-family house, and everyone lives in one of the slots. Now, is that an inconvenience? Of course. But if you do that and make the sacrifice for 5 to 7 years, you can then have a nice exit on that deal, and everybody has a few $100,000 to go do what they want, right? Then you can maybe roll it into the next deal and roll it up and keep rolling it up, right? So I think if anybody's watching, maybe you're just going off to college and you have siblings, that should be the frame. That's a really easy way to kind of get ahead. And it's possible, if you have 3-4 siblings, by the time you guys are 30, you can control, $8 to $10 million worth of assets. Very, very doable. Very doable. I always like this view looking all the way up into Times Square here. Let me get the QR code off. Hey, what's up, Nick? Hey, Hawaii, what's up? Good to see you. Thanks so much for joining us. Chris says you shouldn't have to be into real estate just to live. What do you mean? Or you shouldn't have to do some of that structure just to live? Well, I mean, we have to live in reality, right? It doesn't matter what should or shouldn't be. What matters is what is, right? So we need to deal with the environment we're in, and we have to, deal with the cards we're dealt, There shouldn't be, 80 million Americans dying a year from fentanyl, but there is, Hey, Boomer, what's going on? Thank you so much for your $2 donations. His thoughts on the new percent for buyer/seller on reps. Oh, the NAR lawsuit? Yeah, I mean, that's a little bit foreign to me because New York City, what a lot of people don't realize is in Manhattan, we don't have an MLS. So if you're selling real estate in Manhattan, there is no MLS, right? And in a lot of other markets, right, essentially is what the lawsuit was about. Everybody's saying, we're getting rid of the 6% commission structure. Number one, there never was a 6% commission structure on any deals that I've ever done in the real estate business in New York City. Nothing is anywhere even remotely close to 6%. That's because in Manhattan, right, the average transaction size is larger, right? So if you're doing like a $2.5 million deal, there's no 6%. But what I believe the verdict of this is, usually the way it works, I'm gonna have to plug in my phone for a second, is if a buyer's agent brings a buyer and closes a deal, the seller, right, if they negotiated with the seller's agent to have a 6% commission, 3% would go to the seller's rep and 3% would go to the buyer's rep. Now that is going away. So the seller only pays the seller, if that makes sense, right? And there's no sort of split. From what I understand from it. So it'll either have to be, if you bring a buyer to a property, just making sure I cross the street here, you're either, and if you're working with the buyer, right, they're either going to have to pay you, or they could just go direct and buy from the seller's agent, right? That's really the process. Now, could there be conflict of interest there? Maybe. Will it hurt first-time home buyers? Yeah, I think the first-time home buyers who are like very, very, like really don't know the process, if they don't have representation or they can't afford it, could they be at a disadvantage? I think yes. So really the takeaway from this change is, if you're a buyer, you really need to be doing extreme diligence on the home you purchase or the piece of real estate you purchase, because if you can't afford the representation, that's going to be a really big problem. So I think you just need to do more diligence and be more focused. Second. Stan says high commissions were getting out of hand, it seems. Yeah, I mean, the thing is, commissions are always negotiable, right? So if I go into a meeting, and I do this every day, if I go into a meeting and pitch somebody, hey, you know, I'll sell your property, you know, and I say, you know what, my fee is 6%. They're gonna say, no, not gonna happen. I'm not paying 6% for you to sell my $5 million house. Commissions are much lower in New York City, or in Manhattan to be specific, but that is negotiated. Where the kind of the collusion that was alleged is a lot of brokers, right? Again, this is what it said in the lawsuit. We're allegedly colluding with each other to say, look, we're not going to go below the standard. We're going to set the standard in the industry to be, you know, 5 to 6%, right? That's kind of what was alleged. But over time, guys, just like in anything, commission compression happens in every single industry, right? I mean, just look, you know, we talk about it on Wall Street all the time. Chances are, if you were investing in the 1980s and you bought a mutual fund, you would have to pay 5% on a front-end load fee. You would pay a 2% management fee, and then you'd pay 5% on the back end, right? All right, I'm gonna let this crazy lady go because I can't listen to her talk. So commission compression comes for every single industry. I think it's just been very, very slow to come to the real estate industry, but it's come faster in Manhattan. So Manhattan, you don't have an MLS, number one. So there is no MLS. But you're not gonna really get 6%. Very, very seldom. Yeah, so in conclusion, the way it's going to operate is, instead of the traditional way it's worked, where if you're a seller's agent, you negotiate the commission, right? Say, hey, I'll list your property for sale and it's going to be 5%. And if a buyer's agent brings a buyer, you split that 5% with the buyer's agent. The way it'll work now is there is no compensation for the buyer's agent, if that makes sense, right? So if you're in the real estate business, right, it's either you have to be very, very heavy on listings, right? Listing properties, which many, like, if you're on a successful team, many teams are. And also, a lot of very successful teams now are getting into the development business. So, like, building product and selling their own product, right? I think that's really where a lot of the opportunity is. Like, my goal in my career is to build my own buildings, right? Build my own projects, acquire, a distressed asset here in Manhattan, tear it down and build residential condos or something like that, right? I think that's kind of where my passions lie. But on the ruling, do I think it's going to be good or worse for consumers? I don't know. I think it may be tough on very, very first-time home buyers who really don't know what they're doing, because they could potentially get taken advantage of. But as in anything, you should be hiring somebody who has real expertise in the industry. There's an extreme, very, very low barrier to entry to get your real estate license.
You take a course and you take a test, and then boom, you're in. But yeah, you know, many first-time home buyers are struggling to come up with their down payment for their house, right? So they're not going to have 2% to pay you to help them find their place. It's not going to happen. So what I think, my prediction is, in some of these markets, really in a lot of the flyover states, the buy-side agents will pretty much be obsolete, and it'll just be sell-side, and the individual buyer is just going to have to do a lot more diligence, which down the line, honestly, that may be a good thing, because I think a lot of people, and you'd be surprised, guys, I mean, I deal with clients all day, and you would be very, very surprised, even some very wealthy, sophisticated people, like, it's kind of scary, like, with what they were willing to go into a deal and accept terms on. It's, like, frightening. And these are people, I mean, I work with, you know, a household income of, you know, 3.5 million bucks. You know, one's a partner at a law firm. You know, the other one is a big private equity guy, right? And they walk into these deals, they're like, yeah, we were going to do this, and, yeah, the developer was going to have us pay the transfer tax, the management tax, and the New York State transfer tax, and they don't even try to do any negotiation, and they don't do necessary inspections, they don't pull title. It's just, you know, so I think long term maybe it'll be good to force people to do diligence on their own. I mean, if you're gonna spend, you know, $500,000 for a $500,000 for a home, you really got to make sure you're doing your diligence. So we'll see. This is an awesome shot of the Empire State Building. I've often viewed the real estate world in the future of everything being on a blockchain, like a distributed ledger, right? I think a lot of title stuff will go by the way of that. The only issue with real estate, and I'm actually, in full disclosure, I'm involved in working on a startup that does this in my spare time. The problem is there's so much nuance in the real estate world with, you know, does this have a lien on the property? Did they pull permits to do this addition and that? And so to have, you know, in the buying cycle, so much nonsense comes up that makes the deal a hellscape. To have a very simple, sort of securitized way of selling real estate may be very, very difficult, if that makes sense. Because there's inspections involved, maybe there's structural issues, maybe the previous owner put in a bathroom and they didn't have the proper permits. You know, so much stuff that goes into it that it's not the same thing as buying and selling a share of stock, right? In a perfect world, I think it would be great if you can kind of have like an exchange, an online exchange for selling real estate. The only hurdle that we need to get above, right, or overcome, is all of the nuance. Like the nuance of kind of just what we just talked about, right? The permits, you know, how old is the roof, all this stuff that if you were just buying it sight unseen, it would come up. So it's going to be difficult. Hey, a collector's dream, what's going on? Good to see you. Mark says if you sell $2.2 million place, or two $2 million places, that's $80,000. That's enough money to live for a year. I guess it depends on where you live. But, you know, let's say if you sell a $2 million property in Manhattan, you know, the government's gonna have their hand out for 50%. And probably a portion of that is gonna go to the marketing budget, and then the broker takes their cut. So to really be successful and make any money in sales, like residential sales, you got to be doing crazy volume. Like, you got to be doing nuts volume if you want to be making, you know, very high 6 figures, 7 figures, right? You got to be putting up crazy volume. All in Spanish is what do you mean? An online exchange of real estate, Zillow. Yeah, like a Zillow and what is the other one? Redfin have something similar to that, but it's not at scale. And I'm talking about like the process of closing the transaction, like a full exchange, like you would have a Schwab or something like that. There's iBuyers for sure, but at scale, that model really doesn't work too much. Like, you can have a Redfin, right, where you can go and actually just sell direct. If you've been on Zillow, there's a button that says, you know, you could sell your home physically to Zillow, and they'll just do a clean cash transaction. But at scale, it's very, very difficult to manage. And if you remember what happened in 2021 with the extreme frothiness that was going on with those iBuyers, very difficult. There'll be a happy medium for sure. I think the good thing for consumers is that you'll know 100%. Transaction costs in anything over time will trend towards zero. And I think that's good for consumers, right? If you trade stocks, pretty much your transaction costs on the buy and sell is zero. I mean, almost nobody pays commissions for trading. I think over time, you'll start to see that in most transactions of things, which is good. Now, this is the building that is going to be blocking the entire view of the Empire State Building if you're standing right at Madison Square Park. This is going to be an amazing condo, though. I mean, imagine having that unobstructed view here. It'd be stunning. Sean D's Tom, back in 1995, I was paying $375 for rent for a 2-bedroom apartment. Holy crap. The realtor said you could purchase a new condo for the same price. I paid $50,000 for a 2-bedroom, 2-bath, 1,100 square feet, and now it rents at $1,200. It's insane. Yeah, that's wild. I think the younger you are, the faster you could acquire assets, the better. And I think the younger you are, if you can acquire a property, right, that somebody else pays, then you can have your cost of living covered, and then you can go make big bets in other business ventures that you want to start, right? The number one cost that many Americans have is cost of living, right? We saw that in the CPI report with shelter. So if you can get the funds together for a down payment, right? Get together 20%, get a duplex, triplex, or even a single family and just move roommates in there and have them pay for your mortgage. Well, now your overhead is gone. And then you could focus on saving all of your money to make big concentrated bets in things you want. Maybe you want to start a business. Maybe you want to start a company. All in Spanish. Says, Tom, you decide increase or decrease of the price of the property you sell, or? What do you mean? Am I reading that right? Tom, you decide increase or decrease of the price of the property you sell, or? What do you mean? What do you mean by that? Like, do I run the comps for like the clients I represent? Yeah, for sure. Hey, cash only. Happy St. Patrick's Day to you too. Thanks so much for joining us. Love this building right here. Hood Patriots' new FHA rules allow 2 to 4 units, 5% down. I think I'd advise against that. I mean, that's a little bit too much leverage. I think if you could only scrape up 4 to 5% to put down on a house, I don't know. I don't think you could afford the property. You know, it only takes, one, AC unit to blow to kind of put you under, right? It only takes, one plumbing mishap and the toilet backs up and then you got to, replace the main line. I mean, things happen, right? Real estate isn't passive. If anybody who owns property in the chat, if you own a house, if you own investment property, you know that real estate investing is not passive. It is very, very much active, and things happen, and tenants are a pain in the ass in most cases. So if you are, kind of living on that razor's edge with only being able to put down 4%, I think that's a little bit too much leverage, to be honest. But I don't know, that's just me. But renting has its perks. I think a lot of people don't understand the benefits of renting. Now that may sound crazy, but it's true. If you're very, very, very early on in your career or something like that, you want the mobility. Maybe you got a job in Austin, Texas, right? You work there for a few years, then you bounce around, to kind of figure out what you want to do. So renting has its perks. If the AC goes out and you're renting, your landlord pays for that. You don't pay for it. The refrigerator breaks, you don't pay for that. The landlord pays for that. So there's a lot of costs. Hi, this is West 26th Street. This gelato place is always down the block. Mimi says, yes, tenant selection is very important. It affects 80% of issues. For sure. And a lot of people want to skimp out and they don't want to pay, the $100 for the background check. They don't want to pay the $50 for the credit check. No, if you're going to have somebody in your home, okay, you have to make sure these people aren't crazy. I mean, there's horror stories out there. So you have to invest the time, the energy, and the money into fully and completely vetting your tenant. And this may sound a little bit, this is actually a piece of advice I got from someone. You shouldn't really have your tenants really shouldn't know too much about you, right? If you have to pay a management company to be between you and the tenant, it's best. And you don't really want to rent to friends, like really, really close friends, most of the time. Because they're like, I'll give you the rent. I'm just a little bit late on the rent. I'll give it to you next week. We're friends, right? We're buddies. We went to college together. You just got to run it like a business. Don't be too harsh, but you got to operate it like a business. At the end of the day, it is a business if you're a landlord. This is the new Ritz-Carlton building. Hey, all in Spanish. Just Tom, why did you leave the tech industry for real estate? Well, I want to build buildings. It's my main goal. I want to build these things you see here. That's the goal. So I think there's really big opportunity that's going to be coming up. I mean, it's already here. The opportunity is here for some distressed asset sales here in New York City. And, as they say, when everybody's kind of running out and are very bearish on New York, I see huge opportunity here, particularly in the real estate industry. And if you can get a part of a good team that also develops buildings, I mean, I think you can have a really good run between now and 10 years. I think the city is going to have a lot more new product on the market. You're going to have a lot of distressed sales, foreclosure auctions that could be repurposed to build new residential. And I'm excited about it. I think it's going to be good. All in Spanish. Check us out. If you type !Thomas in the chat, it'll drop the website and it'll give you our bio. You can see what we're all about. Stephanie says, would you reach out to your followers for an opportunity to invest in your buildings? Probably not, honestly. Just in full transparency, I think that could be a real big slippery slope. I kind of just like doing these live streams just for fun, have a chat about the markets, make connections. But I think when you kind of wrap that stuff into it, that's kind of when it goes into a little bit of a slippery slope. Or, even just, I see big opportunity in Miami, particularly Miami-Dade in non-flood zones. I think there's a big market for, there's just a lot of opportunity. So, all in Spanish. That means you will need investors, right? Yeah, check us out. I mean, the Colonnade Group, we're a small private equity firm. We've done multiple buildings here in the city. And the Kirsten Jordan team at Douglas Elliman, we are one of the top luxury real estate sales teams in the United States. So my boss's husband runs the Colonnade Group. So they've built buildings like 75 First Avenue, 139 East 23rd Street. So that's the business. You know, we build buildings and we sell them. We acquire distressed assets. We try to repurpose, make them better, and sell them. That's the business. And it's interesting, right? I mean, being able to see something, you know, potentially be a part of something, build it from the ground up, you learn a lot. You learn a lot about air rights. You learn a lot about debt structures. It's really good for networking too. Justin Goins, so basically you flip houses? No. I'm not sure how that explanation says we flip houses, but yeah, Tony Beats. So I'm thinking about doing that on our second channel that we start. I just have to figure that out. I think it'd be cool to have a separate dedicated channel to kind of do those interview styles. You know, bring on some notable hedge fund managers on the street, some notable private equity guys and girls. I think that'd be awesome. Twitch ASMR, so since you're not in Florida half the time, you lose out on the state tax benefits. Yeah, I mean, I'm not really trying to optimize for taxes. Right now, I'm 28 years old. You know, I think people that optimize too early for taxes, it's like they want to, you know, save 5 cents so they don't, you know, but they could be making $1 million, right? So yeah, I get fully slammed with the New York State and city taxes, unfortunately, but I'm happy to pay it. Actually, I'm not. That's a lie. I'm not happy to pay it. I will pay it because there's opportunity here, but I'm not happy about it. Yeah, I'm definitely not happy. I'm not like, yeah, I'm super happy. I would be happy if the city had good services, if they cleaned it up, if we didn't have so many homeless people. I mean, with all the taxes we pay, I mean, the city should be able to provide, you know, normal, safe shelter for the homeless. You know, if you've ever been into a homeless shelter in New York City, it's safer to sleep on the street. And that's not an exaggeration, that's the truth. Many homeless choose to sleep on the street because it's more dangerous to be in the shelter. That's the unfortunate thing, but it's true. You know what I just realized, guys? This is a late stream because we started late. So I apologize. I'm keeping you guys up too late. I think we started at like 9:30. But anyway, guys, Dan Sang says, Tom, do you have any news on the next $1 Million Listing New York season? So the show has been canceled, so there's going to be no more $1 Million Listing New York. But there are talks of something more interesting coming on Netflix, maybe, but not the same structure that it was. But we'll see. I think my boss will be making some appearances on Sirhan's new show. Probably. Dave says, Tom, I was just thinking, is it going to be an early day for you tomorrow? Actually, tomorrow, no. Actually, tomorrow, no. I think my morning's pretty open. I mean, thank God. You know, the weekends are usually busier for me, actually. Mondays are kind of quiet. All right, guys, this was fun. This was a fun stream. But if you guys enjoyed the live stream tonight, feel free to leave a like on the video. Click the subscribe button if you're new. And we will see you all tomorrow night. Hopefully everybody had a wonderful St. Patrick's Day. And we will see you all soon. So Gary Carpenter, I appreciate it. Western Mass Dave, Hawaii, all of our moderators, appreciate it. If you guys want to receive all of our equity research for free, feel free to scan the QR code on your screen or type !news, N-E-W-S, in the chat, and that'll bring you to our Substack. We publish every other Thursday after the market closes. Stephanie Stearns, appreciate it. Ali Starr, SoCal Lawrence, thanks so much. Joseph Hardaway, all in Spanish. Tadit Tara, UniJ23, Matthew M, Sabrina Fair, Western Mass Dave, Hawaii, SoCal Lawrence, and Todd. Take care, everybody. Have a good Monday.